which I understand is now the politically correct term as opposed to saying low-cost housing. But we're looking at the Nairobi County government putting together a couple of PPP projects whereby you're looking at between 2,000 and 5,000 units, residential units coming up under the PPP model, whereby the county government will be providing the land, will be providing certain specific support in relation to infrastructure, but the private developer will take on most of the commercial risk around that. We are also seeing projects around university residential housing that is coming up. And I think this model, if these initial 2 or 3 projects are successful in the real estate side, I think you will see a lot more projects in various counties being developed under this model.
Okay, thank you very much. That's fascinating. So we're looking at more private and public sector cooperation to develop social housing that's desperately needed by the Kenyan population, some 45 million people, but where the government doesn't necessarily have the means to provide that themselves. You mentioned power as well. I think it's important to note that infrastructure isn't just about roads, and Kenya has made huge leaps and bounds in it's not just its electrification of rural areas, but also in the provision of power itself, in particular in the geothermal projects that it has around the Crater Lakes, and also the wind farm in Turkana, and of course the new dams that are going in. And it has really made a substantial difference to, right at grassroots level, us managing commercial property. We used to get electricity bills for shopping centres, for office buildings, where the power could simply double because the dams had run out of water, and the utility companies simply started burning diesel to supplement that with fields and fields of generators. Those days have gone, and Kenya's power is much, much more stable. It's made our lives incredibly a lot easier, overcoming those problems, the load shedding and the increased costs that we used to face before. Just thought I'd throw you out there. It's always good to have a little bit of good news coming out of these countries from time to time. Another question, I think, for our friend Dr. Dan Tebwezi. Dan, tell us, we've looked at, we've talked a lot about Kenya in particular. We've touched on Ethiopia. Uganda, you've just come out of your election cycle, the 5-year curse that we all experience that has a handbrake on our GDP. I think Kenya's probably going into that now, and you're just coming out of it. Can you tell us what your short-term prospects are for Kampala, for your property market generally? Thank you.
Yeah, thanks so much, Ben. My name is Dan Twebaze. From Kampala. We develop properties in Kampala, and we're also involved in PPPs. Like most African countries, governance is still yet to be properly sorted, so every election year, there's a bit of a fever. There's a bit of a slowness. Capital doesn't like uncertainty. There's a bit of uncertainty. And towards the end of 2015, in addition to the commodity challenge that affected the globe, Uganda particularly had another risk, the political risk, because there was uncertainty around the elections that we held in February. Now, once this is gone, most of the tenants held on signing new leases because they were not sure what would happen. And I think until these countries get out of this challenge, Uganda in particular, I think we may see a repeat of this kind of phenomena in 2021. Now we see people increasing appetite, more people signing up leases, following up the completion of the election exercise. In addition to the previous point, I'd wanted to contribute to Musa's point on PPPs. Uganda in particular also has put in place the PPP law, like Kenya did in 2013, and Tanzania had done that before in 2010. And at the moment, they're putting in place a capability or a competence on the government side to respond to the PPPs. Governments had expressed a wish to do PPPs sometime in 2008, 2009, but there was no regulatory framework for this. Because of the need for transport, energy, those PPPs were successful, but there was none in property. And in property, the risk allocation needs to be need to be carefully studied, and the government did not have the competency to address that. We see this being put in place. They have the PPP units in most of this government, and in Kampala in particular. I see the Minister of Finance has readiness to have a PPP being part of the contingent liability on the Treasury, which I think is a very good move. Before, it was all talk. What I would say is that there's still a bit of lead time in pulling off these projects. Most PPPs take time. I realize that also in developed economies, sometimes PPPs can take up to 3 to 5 years. So there will be a bit of patience required, but it appears these will come to fruition. We are involved in a PPP project where we've been awarded as preferred bidders with our partners from here in South Africa, and we see it moving very well, the contract negotiation moving on smoothly, and I also feel many more government departments are going to think about the PPP in office delivery for the government offices. Thank you.
Okay, great. Thank you very much for that. I think it's probably time if we can open up questions to the floor for our panelists. It's very difficult to see with the lights, actually. If there are any questions out there for the people on the panel. It's good to see so many of you out there. Yes. Do we have a roving mic for the gentleman in the second row from the front here, please? Is it on?
I think it's on.
Yeah.
All right, there we go.
Can hear you.
Thank you, gentlemen. We're talking seizing the East African opportunity. Now, one of the areas that we probably don't talk too much of, or I haven't seen much talk on, is around the healthcare, property healthcare space in the East African continent, basically abroad, across the whole continent. Are there gaps of opportunities in that space, and maybe where are the barriers of entry in that space? Thanks.
Well, I think just speaking from our experiences within Kenya, we are seeing quite a big increase in development of healthcare facilities, but they're mostly private sector facilities, hospitals that are built from scratch from investors, and also outreach clinics from existing hospitals. But I don't know if any of the panelists. Okay, there we go. Perfect. Amin Musa, would you like to take that?
So I think one of the things we've seen as a trend in the Kenya real estate space is very large-scale multi-use developments where developers are no longer simply just putting up a retail mall or separately a commercial building. With projects like Garden City, Two Rivers, and a number of other large-scale multi-use projects, in addition to the typical real estate components, which is retail, commercial, residential, a number of these projects are looking beyond those typical components, and health and education facilities and even sporting facilities are now forming part of these large-scale multi-use developments. So I think on a number of these projects, you will find opportunities for healthcare facilities, for education facilities, and even something quite new recently on sporting facilities, for example. So I think there are opportunities within these large-scale projects, and I'm sure also independently, because if you look at the population of something like Nairobi or Mombasa and look at the facilities that are available, the demand supply is just, the gap is so significantly obvious.
So we're talking about the sort of the live, work, play philosophy in these big mixed-use schemes, where you'll have your shopping, but you also have your homes attached to it. You have a healthcare facility, which is always a good way to get people up to the 4th floor of these big centres, driving traffic and so on and so forth. Nicholas, that's the kind of concept that we've seen in Two Rivers, which is a 62,000 square metre development, which you guys have recently invested in. I mean, do you think that's an important aspect of it?
Oh, absolutely. You know, I think one of the problems that Nairobi has got and needs to address is its transportation. If it doesn't start addressing that and putting in more infrastructure, I can see other cities in East Africa beginning to take away the pie that at the moment seems to be going to Nairobi. Obviously, a way to start overcoming this is to spread those facilities around. And Two Rivers, for instance, it's 100 acres. It's going to be very much a mixed-use scheme. Offices, residential, there's a clinic going in there. So hopefully that will ease some of the traffic congestion that exists at the moment. And I think that's the way it's got to go.
Great, thank you. Yeah, sure, please.
Just to add on the comment or the question that came up, I think you've homed in on something, and I'll just talk not necessarily about Kenya, but about Ethiopia again and even South Sudan. Of the 10 project proposals that we may have come across, and in this case 10 is just for ease of mathematics, it's interesting that about 30 or 40% of those have involved the health sector in one way or another. And from a study and a current project we have right now to fundraise for a specialized health facility in Ethiopia, and a similar proposal at some point earlier in Juba before then, of course, maybe things went a bit south. It's interesting that there's also a very interesting point to make. The need for specialized treatment is actually almost as high, if not more, than for basic treatment. Governments or public service is able to offer the basic treatment, but you'll have, and my numbers may not be too far off, because it's about 18 months ago, 2 years ago, you have at least, I think, 50 to 80 trips out of Nairobi today to India and to Thailand to an extent for specialized treatment. And you have, surprisingly, about 37 trips every month again out of Ethiopia and largely to Thailand and not necessarily India for specialized treatment. So investors are beginning to see and then make a decision and say, well, for basic treatment, let me not necessarily compete with the public utility sector, but for specialized treatment, it looks like it's perhaps the new area as far as health investment is concerned. And it's also interesting, as much as there's a lot of hesitation of investing in a place like Ethiopia, for the 2-3 projects we may have pitched to institutional investors, the one that seems to at least have traction and get legs is this specialized project facility, as far as specialized health, treatment facility. So I think you're right, you've homed in on something, but I'm just trying to also emphasize that it's not necessarily for basic treatment, as one may think, this being, can I say, lower emerging economies, but it's also for the specialized treatment, especially given the amount and scale of money that is being exported for people seeking this treatment elsewhere. Thank you.
David, thank you.
I think, ironically, again, for most of these economies, the social impact agenda that health conforms to is so high that I think after power, health sector is one of those areas where you almost have a brochure sitting in a typical health department on how to then participate or invest in the health sector. So I wasn't aware that would be the issue or challenge that you have in Southern Africa, but I think the regulatory steps and compliance have been the least of the investors' problem, and it's more the fundraising that has been the bigger effort as far as investing in those, in that particular sector is concerned. But in this case, I'm biasing myself to then, again, the specialized treatment facilities we may have come across as proposals. Yeah.
Okay, thank you very much, David. Do we have any more questions from the yes, gentlemen.
Sorry, just change the subject a little bit off where you've come from. We've come through in South Africa huge hikes in property tax with the new Property Rates Act here. The last 10 years, last time I was in Africa, there tended to be a move away from sort of World Bank and other funding into city infrastructure projects in the hope that they'd become more sustainable. And I'm not sure where that's led to, but as property developers, it's something you should be very mindful of. Surely that this this is soon to become a major property expense and impact on your planned yields and so on? Is that the case? What is happening with property tax in those business centres?
So I think from a Kenyan perspective, or generally on an East African perspective, what we've seen in the past is actually very low property tax. So for example, in Kenya, until 3 years ago, we didn't even have a capital gains tax for real estate. And the property taxes in terms of government rent and rates were and are still significantly low. We've just introduced a 5% capital gains tax in Kenya, but in Uganda and Tanzania, capital gains tax is clearly an issue you need to think about because I believe there you are at 30%. But in terms of specific property taxes, I still think that the tax levels in East Africa are fairly low. But I think going forward, local governments are going to see property tax more and more as a source of revenue, especially where you see, for example, in Kenya, devolution and powers being granted to local governments away from the national government. So although currently the tax rates are significantly low in my view for property, that could change as local governments see this as an important source of funding for their expenditure.
There was then the second part of your question, which was about infrastructure, and hence, are we still having to depend on multilaterals to put that up or not? And again, it's probably also Dan's experience. You have to price infrastructure either way, so you'll find that in the finance planning of any project, you'll have to assume that everything from the storm drains to the road leading to that particular property, to the, of course, you know, water is two things. There's the water before you use it, and there's I'm looking for polite language for this, but then there's the water after you use it. I think it's black, effluent.
I think we all know what you mean.
So you also have to plan for the pre and post. And hence, what that does, yes, I do agree, it adds on to almost 15-20% of your project as a benchmark will have to go to infrastructure. And we don't see that changing for a long time to come. And unless then you're talking about the public housing or the lower income areas that I think the gentleman from Knight Frank was talking about. So we've had to live with that particular fact. Private sector will always be a step ahead of government sector in that region when it comes to infrastructure and basic utilities. And hence, even with the higher teen returns that you get, a developer pretty much will walk away with 19, 22, 23, 24%. You will find that, yes, that has also captured the almost 15% of project value that you have to accrue to infrastructure. But I think maybe the doctor may have a comment or two.
Yeah, maybe to add on what David is saying, the infrastructure requirement is usually included in the cost of land. Areas that are better serviced tend to be a little more pricey and very pricey in these cities, in Kampala and I believe in Nairobi as well. Those that are not serviced, you find land prices are cheaper, but you lose it in trying to provide your own infrastructure. So it's one of those you need to bear in mind.
I think just to add to that, as a developer, I think you need to be quite proactive in relation to what we call associated infrastructure. So if you're going to put up a development with the expectation and hope that the government is going to do everything for you, then I think you will struggle. So on a number of the large-scale real estate projects that we're acting on, like Two Rivers and Garden City, the developers have, you know, spent a significant amount of money in terms of substation, solar power, telephone infrastructure for telecommunication, road, sewage, transmission infrastructure. So a lot of these projects have taken it upon themselves to deal with associated infrastructure and simply rely on government for getting the approvals, which in East Africa, I believe governments, provided you are going to fund it and you agree on the specifications, the governments are more than willing to grant those approvals. And maybe you can probably describe the infrastructure.
Briefly, if you would. Briefly, I think we're out of time, but go for it, Nick, if you can just...
I mean, there are Two Rivers, if you look at the scheme here, it's a 100-acre scheme. We have our own effective power station. It draws in from 2 different lines from the Kenyan authorities, but it also has standby generators. The top of the shopping center, again, we don't have shade cloth for the parking bays. It's all solar panels. That in itself feeds a gigawatt into that system. So it saves a lot of money. We have our own sewage farm that treats all the effluent from the whole park. So it's a lot of money that you put into that. We've had to contribute to the upgrading of the roads, the entrances to the...
Nick, thank you very much. So I guess in summary, developments in emerging markets require a lot of infrastructure that you might otherwise assume the government would provide for you. This has been a very, very broad topic. I really feel we've only scratched the surface of it. I don't think that we've answered the question whether the shift has actually occurred from west to east. If it has, it's probably temporary rather than permanent. But either way, if you're interested in West Africa, Knight Frank has over 450 staff in our Lagos office. If you're interested in East Africa, we have over 150 sitting in Kenya, another 700 in total on the continent. Please do come and talk to us. But thank you very much for your time, and I hope you found this interesting.